Longtime volatile, Cathie Wood bought the dip while Tesla stocks were falling after a nearly 8-month break. With a target price of $3, Wood expressed her optimism about Tesla's share price performance this year, citing the stock's gradual recent rise back into the positive. According to Wood, the price of Tesla stock will rise 3 times further. Why does she think this forecast is correct? How is Tesla handling the escalating competition right now? Are other analysts and professionals in agreement or disagreement with Wood? To find out, keep watching. 33,482 shares of Tesla were recently acquired by exchange-traded funds run by Cathie Wood's ARK investment. At the time of acquisition, the shares had dropped 11.6% to $829.10. At that price, Wood paid an estimated $27.76 million for the shares. After months of cutting back on holdings, the renowned stock picker and Tesla Incorporated bull capitalized on a decline in the company's price following its earnings. The corporation purchased its first Tesla funds during the recent sell-off following an all-time high in the stock price. These acts, in our opinion, clearly demonstrate a resurgence of confidence in the stock price and Wood's outlook for this year. Approximately 8 months had passed since the company acquired new brand shares. Cathie Wood is renowned for her approach to stock selection, which centers on the future, with holdings in businesses like Coinbase, DraftKings, Roku, Block, Teladoc Health, Tesla, and Zoom Video. Her investment firm, ARK Invest, is well known. According to Wood, conventional investment strategies often undervalue disruptive innovation because people might not fully see the extent of the potential rewards. They're failing to recognize the disturbance or assess the opportunity. Nevertheless, Wood increased her target price to $3,000, which is triple the amount at which the company was trading the previous year. Rob or not, a highly cautious investor in expensive growth stocks such as Tesla was challenged by Wood, who remarked, "My guess is that if nothing changed in our outlook and we got to $3,000 next year, we'd be peeling out of it." Very positive numbers in our perspective. Let's examine current state of affairs. Even before the incredibly outstanding fourth quarter of 2021 earnings call, Tesla's stock price had been declining for a while, but it is now finally rising. Many investors and analysts had the exact opposite expectation. After the astonishing fourth quarter 2021 report, they were expecting a boost in value, but the stock fell even more. The value of this company fell even further when investors began liquidating their holdings out of fear of the Federal Reserve's impending rate hike. To be honest, this year has been difficult for all equities thus far, but growth stocks especially so. Most forecasts are tentative at best. What are the precise odds that Wood's forecast will come to pass? When asked why she thinks Tesla would launch 3 times this year, Wood cited the advantages of electric cars as well as the declining costs of battery pack technologies. He hasn't needed to visit a gas station, for instance, since September 2018. She predicts that these reductions will cause the average cost of an electric vehicle to drop below that of a gas-powered car within the next year. This trend is anticipated to last until 2025, at which point the typical price of an electric vehicle will be $18,000 as opposed to $25,000 or $26,000 for a typical gasoline vehicle. Wood is right when he says that Tesla is making significant progress in this regard. Recent reports suggested that Panasonic would start producing the larger capacity Tesla batteries in large quantities as early as the next year. According to Nikki, the 4,680 cell is anticipated to boost the electric vehicle's range by more than 15. The Model S's range might rise to 750 kilometers on a single charge as a result. According to Nikki, the battery has a 5-fold boost in energy capacity despite being twice as big as previous models. Automobiles will therefore require less batteries, which are now produced at a cost that is 10 to 20% lower. A decrease in battery costs might make electric vehicles more accessible and expedite the transition to electric vehicles, as batteries are expected to account for 30% of the total cost of an electric vehicle. According to reports, Panasonic, a longtime partner of Tesla, will invest around $80 billion or $704 million in new machinery to produce the 4,680. Rumor has it that the batteries will initially be made at an existing plant in Japan before moving into large-scale production in 2023. Nikkei says the company would start manufacturing the cells on a limited scale this year in order to build a safe and effective procedure. It's feasible that in the future, the batteries will be mass-produced abroad. The business told Reuters that it will establish a test manufacturing line in 2022, but it did not say when it will start producing the batteries in large quantities. Due to its pioneering work in this area, Tesla is expected to have an impact on market sentiment and consequently on the stock market's valuation. That might not last long, though. While Tesla is the business's primary priority, Panasonic's head of the battery division said that the company hasn't ruled out creating the cell for other automakers, even though Panasonic started developing the cell in response to a request from Tesla. We continue to believe that Tesla will prevail since Elon Musk has said that the company plans to produce its own batteries. Apart from battery technology, the market's perception is shifting more and more in favor of positive attributes as Tesla makes advancement. We think this transition will be much more pronounced when the 2022 earnings call opens in the first quarter. Experts have noted that Tesla is expected to have a strong first quarter report given the volume of deliveries this year. How do analysts feel about the target price set by Wood? Do they think that Tesla will travel 3 times as much as Cathie Wood has said? Analysts note that Tesla's market domination and future growth will probably remain unmatched by a plethora of competitors competing for its position, suggesting that they agree with the popular investors' prognosis. According to Advisor Shares CEO Noah Hammond, who just bought $1.08 million worth of Tesla shares, the company has many advantages over their competition. According to Hammond, Tesla's eagerness to bolster its infotainment offerings, it just introduced the video games Sonic the Hedgehog and TikTok, as well as the upcoming launch of Starlink satellite internet, will significantly increase features and margins, in addition to intentions to boost manufacturing significantly and potentially release a smartphone. This should push the stock above $3,000 by 2026, 2027. According to Hammond, Tesla will introduce Starlink, autonomous driving and perhaps insurance goods in 5 years, along with major subscription services into Netflix or Disney+. They will be far ahead of the competition as a result. If Musk keeps up his current level of performance, Tesla's stock might treble in 5 years, according to analyst Garrett Nelson of the Center for Financial Research and Analysis. While several conditions must be met, he continued, if you look at their projections, they anticipate a 50-acre annual increase in auto sales over the next 10 years, helped by new plants in Berlin and Texas. Thus, there's a lot of space for improvement. However, other analysts have greater doubts. As stated, Wood's and other highly bull price projections are overhyped, according to a Wanda analyst at Moya. He claims that they might be reduced soon because U.S. Senator Joe Manchin killed the measure and recently opposed President Joe Biden's Build Back Better initiative to increase the adoption of green energy. Makes his point, stating that Cathie became enthralled with the electric vehicle market. However, I think Manchin's Grinch-like move will lower many others' pricing objectives, potentially costing $2 trillion in investment losses and a few rate hikes. It makes the environment unfriendly for risky assets. Additionally, Moya slammed Tesla's autonomous or fully self-driving service, saying it won't be fully functional as quickly as some had anticipated. I anticipate delays when it comes to complete self-driving or autopilot. He stated, first and foremost, there will be major regulatory obstacles. However, Elon Musk has shown his confidence in that regard. He expressed optimism that the firm will finish its self-driving suite by 2022 at Tesla's fourth quarter 2021 earnings call. The benefits of a self-driving car are yet unknown to the public, Musk continued, adding that he is confident in his prediction and that he will be surprised if Tesla does not achieve complete self-driving by the end of the year. Although we would be happy to share his confidence, he has a track record of making commitments and then falling short of them. We think Tesla's stock price should soar if the company can successfully manage fully autonomous driving technology this year, coupled with battery technology, and puts out an excellent first quarter earnings call report. Because on the other hand, we're not entirely convinced that prices will increase 3 times this year. Will Cathie Wood's forecast prove accurate? How do you anticipate the earnings call report for Tesla's first quarter will be presented? Please leave a comment below.